All right, guys, we are we are on and rocking. Ah, let's talk about this week ahead, and let's see if we can get all the way through it this time. Let's get straight to it. All right, so uh, as we discussed earlier, we're looking for two things from a technical perspective next week. We're going to start with this. All right, so number one, we're looking for next week the SPY, the S&P 500, to make its way back above its 200-day moving average. What's going on? What's going on, Shay? What's going on? What's going on, guys? All right, so we're looking for the market to make it back above its 200-day moving average. All right. Now, this is a concept known as index tracking. We have, I think it's about 8 days left in the month of March. Monday will be the last day. After Monday, if we do not close above the 200-day moving average, then the bullish thesis has to be put on hold for the month of April. And that's why we want to see it happening this week. So we don't want to have to wait all the way until we don't have to wait all the way until what's up, Issachar? What's going on, brother? We don't want to have to wait all the way until next week, Monday, in order to see this taking place. So that's the first thing we want to see out of next week. Number two, let's talk about it. All right, let's swap this out here. Let's plug in that 14. The next thing we want to see, this goes for, so for the 200-day moving average. That's for my longer term position traders. So if you're a position trader or a long term swing trader, if we close above the 200-day moving average um, this week, and we can hold that going into the end of the month, then you can maintain your long thesis coming off of these lows right here. And who knows, you might have some upside in the month of April. Okay. But for those who are more focused on the shorter term, what's happening in the shorter term, uh, you know, started with my guys who like to trade those breakouts. Um, Starting last week Monday, so the entire week, and so last week we consolidated and traded within a half a standard deviation of the 14-day moving average, or one half of an average true range around the 14-day moving average. So next week, if we can break out the highs of next week, which was Wednesday, then that would be a good signal for my breakout traders. And whoever you are, whoever if you like to trade breakouts, then a nice solid move above Wednesday's high with some with some volume and some with some muscle behind it, right? That'll be a nice signal for you. As I was speaking about earlier, if you're more of a break and retest kind of person, right? You're looking for a breakout above Wednesday, right? Wednesday's high or last week's high, and then you're looking to retest that level, finally, push higher. Now, if you're a break and retest person, you may not actually get that retest next week, right? You may find that the market makes a stronger move to the upside, and then maybe pulls back the following week. All right. And if that happens to be the case, no worries. All right, no worries. A it's not gonna be a problem there if if you've already seen a nice solid move, you know, a nice healthy retracement to retest that support level is not going to hurt. Now, I will point something out that I didn't point out before, and this is important. If you get that breakout, if you get that breakout above this area right here, right? Keep in mind that you're probably going to end up above the 200-day moving average. So, um, whatever retracement you see might just retest the 200 instead of retesting this area. So keep that in mind as well. All right. So, a breakout above this area could be in a breakout above the 200. So whatever retest you get, look to see if it's retesting the 200 or this area right here. And maybe testing this area and pushing back above the 200 is a good signal. Those types of things will definitely help you out. Right. So that's that for as far as like the trades that you can look out for next week. Right. Um, does the Wednesday high apply to the Qs? The high of last week for the Qs. Hold on. Yeah, there we go. Was actually, yeah, it was Wednesday as well. No, actually, the high was Monday. So you need to see a breakout above Monday's highs. And the Qs are also trading much more below their 200-day moving average. Right, but yeah, there you go. So Monday's highs is what you need to see there. All right, and I'm gonna caution the same thing here. If you're breaking out and you end up breaking this 200-day moving average, you might have a retest of the 200 instead of a retest of this level. Okay, and these are the types of things that have people kind of left behind in trades sometimes, where they're like, "Man, I was waiting for it to retest this and it didn't come back." Like they may say something like that, right? Well, a lot of times people just are missing the right. If I take the 200-day moving average off my chart, you can see how somebody might expect that retracement here without even if the 200-day moving averages are there. So then they get this instead. So they get a push higher, then they get come back here and never make it to this level, and then bounce, and they're like, oh, it never made it to the level, right? This is why certain things are just good for perspective. I don't even keep the 200-day moving average on my chart all the time, right? But I know when it's relevant. I know when it's relevant, and then I go ahead and I make it work. All right, sorry about that. Now, so some of the things that we've seen last week. So when you get these consolidation areas right here, the question is what's happening around that time period. So one of the things you want to see is some volatility contraction, right? So we did see the VIX close. We did see the VIX close lower, and just almost below 19 there. So that's going to be one thing that's going to really help us out. Next, we also saw the credit spreads in the market start to narrow out as well, right? So that's going to be something that's good to watch, over next week to see if the volatility continues to contract, right? So that's going to be a good deal. All right, now the big question is going to be, well, what actually moves the market next week? What's actually going to move the market? Sorry, 1 second, guys. All right, sorry about that. Now, so what's going to move the market next week? That's the big question, right? So, for starters, um, and what I'm getting at here is the market doesn't just move on its own. That's not how that works. All right. You're you're looking for the market to, like, to find some form of a catalyst, right? That helps to propel it forward. Or and like the same way you saw things bringing the market down, right? You need the same thing. You need to, you need the market to price in some type of something that's actually beneficial to the economy and to the market right now, right? So we need some good news. So one of the things that we saw last week that helped to stabilize things was that you know Trump indicated that he was flexible on tariffs. We're going to need to continue to see that this week. That's one, right? So he can't go turning back on that this week. We want to see him to continue to we want to see him continue to signal that he's flexible from that perspective. All right. Now next we had several mega caps that started to recover last week. We want to see that recovery continue as well. We want to see those recoveries continuing. And we can't have we don't want any of this next week. Right, so last week we had FedEx and Nike coming out and talking about the consumer, and the weakening economy, stuff like that. So if we're going to see the type of week that we're looking for, we need some positivity in the market. All right, that's what we're going to need. So those are the things that we're going to look for. Now, what's on the calendar that can help us out with that? We're going to start with this flash PMIs on Monday. So that's going to be the first thing that comes in. All right, you're looking for flash PMIs to come in positive, especially in the services sector. You can see manufacturing. You can look at the trend. All right, the recent trend. You can see that that's been upward for manufacturing. All right, but if you look at services, right, the past two reports has been they've given us some downside signals for the economy. All right. Now they haven't given us a reading in contraction territory yet, but GDP reports are suggesting that this could be potentially on the way. So we don't want to end up getting any weak PMI reports. PMIs have a 70% correlation with corporate earnings. So when PMIs are weak, there's a 70% probability that your corporate earnings are going to be weak. Just keep that in mind, right? Services sector being the most important part, the biggest part of the economy. All right. Now, next we have consumer confidence. That's projected to take another hit on this next report. We want to see that consumer confidence. We want to see that consumer confidence coming in above expectations. All right, if we get some above expectations readings on consumer confidence. That could also help push the market higher next week. I am going to be looking out for durable goods, but more so durable goods minus all of the extras. I want to boil down to what we might be able to expect from business spending, and so you'll see a lot of that. You see a lot of that conversation happening on on Wednesday. All right, around business spending. Now, the next thing here is going to be corporate profits and GDP on Thursday. This probably won't have as big of an impact unless we get a major, you know, surprise in GDP. Um, and we're probably going to look straight forward to PCE on Friday, right? Get a little bit of a look there, and that can give us some idea of what could potentially come from the Fed on their next meeting. All right. Now the Fed Watch tool. Let's take a look at that really quickly. So 44 days away. That's where our next um, Fed meeting is. At 44 days away, and there's an 86% probability that we're not lowering interest rates on the next report. Now, keep in mind that we already know that, and the market is, still up we're still up in the pre-market. So, as of right now, you might say the market feels like this particular probability of not lowering interest rates is already priced in. As far as where that first interest rate decrease is being factored in, it's being factored in July on the July I'm sorry, June, I meant to say, interest rate decision. That's where we're thinking it's possible that the Fed may make their first move, right? So we'll see. We'll see what ends up happening there. Now, I had a few articles here pulled up that we'll just breeze through really quickly. And you know, so consumer confidence, as we were just talking about here, right? So will the stock market's relief rally continue? Which is our topic of conversation right now. All right. Now, um, let's see here. So the U.S. stock market finally breathed a sign of relief last week, bouncing back from its sharp sell-off after President Donald Trump, after his ever-changing tariff plans sent shockwaves through financial markets earlier this month. But investors still need to buckle up as Wall Street's roller coaster ride is far from over. This week's full slate of data releases could easily reignite volatility in the stock market already feeling uneasy about the economy. And that's essentially what we're talking about right there, right? So these could be some pretty this can be some pretty impactful reports that we're going to get this week, right? So investors are eager to see if this week's economic data will shed light on how tariff related uncertainty and government layoffs have since impacted the health of the US consumer, and more importantly, whether they still sustain the market's relief rally or plunge stocks further into decline. All right. That has left Wall Street seeing Tuesday's Consumer Confidence Index from the Conference Board as the next key event for U.S. stock market. Economists polled by Wall Street Journal expect U.S. consumer confidence to sink further to 95 in March. That's from 98.3 in the prior month. All right, so the decline would be the fourth in a row since the index hit a 16-month peak of 112.8 in November. Um, that's one of the things to keep in mind as well. Um, most professionals use things like um, consumer sentiment as contrarian indicators. So as they start to hit these highs, you start to look at that as more of a signal that whatever positivity you're experiencing may come to an end eventually, right? Um, as we as we start to see consumer confidence hit lows, you start to think that maybe some relief is on the way, right? Because you got to think about it, right? So what happens when the consumer becomes, and more so on this side too, right? But what happens when the consumer starts to feel some aches and pains, right? Somebody always tries to feed them the medicine, right? That's just what it is, right? So we already talked about this. Trump is hitting on some flexibility. You know, now this could be something that we can hear some more talks about next week. I will be keeping my eyes on crude oil. Still not ready for that trade just yet. All right, still not ready for that trade just yet. We will keep our eyes peeled. All right. I would love to see a revisiting of these lows, maybe even for the market to break through these lows, and then we could start talking business. But for now, let's see what's going on with production around the globe. I want to really focus on whether or not we're going to see these elevated production levels that everybody's claiming. All right. There's supposed to be a lot of drilling and a lot of new drilling and things like that going on. So there's only one more thing I wanna touch on that we'll focus on here, and that is let's take a look and see where our gamma exposure is in the market for the week, and see how that lines up with our key levels. All right. We're gonna just focus on our SPY as usual. Let's go to our gamma exposure. All right. Okay. So here's your big issue right here. This is going to be your big issue right here. All right. Right now, I have, where are we at here? Right now, we have the next 2 weeks. I'm sorry, the next 2 days, right? And we have the next two major expirations. All right. That's just the default. It's just defaults to those, right? So the next 48 hours and the next two major expirations. So here's how this works. You got this negative gamma happening right here. Right? So this is where most of your gamma is concentrated. When we think about gamma in the market, we think about what market makers have to do at those levels, and then will there be enough activity on the other side of that to either mitigate it or slow it down? So when gamma is negative, when we have negative gamma, the market maker will have to go with the flow. Meaning, if the market falls, the market makers usually have to do some selling to hedge against that downside. All right. If the market was to rally and break, what is this here, 565, right? Then the market makers would usually have to buy, and you know, and that's going to be their way of hedging against that upside. That's when we're dealing with negative gamma. If we were dealing with positive gamma, and that would be to the upside here. If we were dealing with positive gamma, then the market maker kind of does the opposite. So that ends up more like support and resistance. All right, it ends up more like support and resistance. So let's say this was positive here at 565, then the market maker would start selling here, and then there'd be some resistance. But in this particular case, we have negative gamma overhead. All right, and we haven't seen a lot of this in the past couple of weeks. Now, remember when we were up higher, it was all resistance up here in the gamma field. All right, but look at us now. Look at us now. Right? Excellent stuff. Excellent stuff. So, so the market maker is probably going to do some buying as we break above 565. The question is going to be, will they be met with sellers? That's the big question. Will they be met with sellers? Are there more sellers above 565 that can challenge the buying that these market makers are going to have to do to hedge their positions? Because if not, there's nothing else here until we hit about 572-ish. All right. Now let's match this up with our chart really quickly here. What was our levels looking like on our chart, right? So our 200-day moving average was sitting where? Right around 573.51. And our high of Wednesday was sitting right around 570.95. So when you kind of factor that out, right, that kind of puts 572 right smack in the middle of those. So all your gamma is sitting right between the high of Wednesday and the 200-day moving average. If you think that's a coincidence, fine, so be it. Right? I don't happen to believe so. Okay? So this is telling us the first bit of resistance that we're going to experience in the market is going to be as we start to hit this point right here. Isn't that crazy? I want y'all to think about that. It's telling us that the first bit of resistance, the first real resistance we're going to experience is as we get in this area right here. As we start to break the highs of Wednesday, that's the first sign of positive gamma. Right? So, yes, we're going to be attracted to that positive gamma, but market makers are going to start doing a little bit of selling here. But look at this, though. It's not a lot. It's not a lot. It's not a lot. Okay? Now, let's see what happens if I add the rest of next week in here. All right, let's add the rest of next week here. All right. So yeah, still not much, still not much. Right, we're still negative here, but look at this, we're even more negative here, just for the record. That just grew. That's 600 that's over $731 million of negative gamma right there. So if any of this stuff impacts us in a negative way, I'm just saying, right? Matter of fact, we talked about this. Hopefully, you guys, y'all still got y'all buy targets, right? So here's what I see. Let's talk about it. All right, here's what I see here, and look at that. Doesn't that make a lot of sense now? Doesn't it make a lot of sense now? Look at this. Right up to that high target right there, right? Makes a little bit of sense now. But if we start to break through this negative gamma here, right? I don't want you guys to get excited and start buying up everything. Don't get excited and start buying up everything if we break through that negative gamma. Wait for a little more of a push. Wait for a little more of a push. Because our next big buying opportunity, right? 5,250. That's our next big buying opportunity. In fact, let's check our trader's cheat sheet over here. All right, look at that. So we break 30 on the RSI at 5,003. I'm sorry, at 500 538.85. All right. Now, let's see if I can pull up SPX here. That's about 5,400. So that's about, what is that? That's about 150 bucks off of our next big buy target. So I think we can get to our next big buy target if the market's coming down here. I think we can get there. So, hang tight, hold up, but as we talked about before as well, you know, even if you get close to this area, even if you get in this range and you're already oversold in the market, this is where we want to be at. This is where we want to, whatever those next purchasing opportunities are going to be, they're going to be right around here, right? So I just want to just point that out. Now, haven't really done a lot of let me see here. Haven't really done a lot of talking about the commitments of traders lately. Let me go to my let's take just a quick glance here. Hold on. Let me make sure. There we go. All right, let's go to our indices here. And we're just looking to see if there's been any recent looking to see if there's been any recent highs or lows, Let's see here. So this is pretty interesting right here. All right, to see this hitting a 52-week high on these E-minis. Right? So the E-minis are actually the least negative they've been in a while. So I want y'all to think about that as well. But but when you hit these 52-week highs, you could get a bit of a pullback in sentiment. So as we move higher, and that makes sense to what we just discussed anyway, right? Now your Nasdaq micros are falling into the negative. All right. But your Russells are coming back into the positive here. So we're getting a lot of mixed signals coming from the from these indices. As you can see here, let's focus on the Dow futures here. You did recently hit a 52-week high here, and this is what I was talking about. You see, so after you hit these highs, you could have a little bit of a pullback here. So you can see the same thing in these these minis right here also. I guess in as we're hitting these highs, the the one thing you want to look out for next week is if we get any positive news. Listen to me very carefully. Listen to me very carefully. All right, so your E-minis right here. Let's go back over here real quick. All right, so your E-minis right here. All right, hitting a 52-week high last week. Right. So I guess one of the things that's going to be important to pay attention to, if we get any good news If we get any good news next week, listen to me very carefully, guys. I'm serious about this one. This one is a really big deal. If we get any good news next week and the market cannot close higher on that good news, expect these lows again and move out the way. Expect these lows again and move out the way. All right. Now, I'll be back on tomorrow, 3 p.m. for the Power Hour. We'll talk a little bit more about this. But that last point that I just made, if you got a notepad in front of you, whatever it is, you got a little sticky note, write it on a sticky note and stick that to your computer. If we get positive news next week, remember, we just hit a 52-week high, right? As far as positive sentiment on these mid-cap E-minis. Okay? So we're just starting to get positive on these mid-caps. All right? So that's a sign that people are people starting to look at where we are right now as some level of value. Okay? So if we cannot close higher on any positive news next week, move out the way. Just move out the way, man. All right? Don't, especially for those who like to trade shorter term contracts and things of that nature, don't get smoked. Right? And don't go thinking, oh, the contract, it's gotta come back. It's gotta come back. Don't do that. All right. I know it's painful sometimes to take losses when the market reverses on you unexpectedly and quickly. That's gonna be one of them ones you're gonna have to take. But I can promise you, if we can't close higher on positive news next week, then that's just a sign that that optimism is at peak. That's peak optimism, basically. So it's like it's the same as saying, well, positivity brought us here, but we're not getting any more positive. That's the same as saying that. Y'all understand that? Okay. All right. So for those that are joining us for the first time, make sure that you hit that follow button. All right, so that way you can tap in with us when we pop on other days. Look forward to talking to you guys tomorrow. Again, I'll be on during Power Hour, 3 p.m. Eastern. All right. Other than that, everybody be blessed, stay well, and I'll talk to y'all soon. Y'all already know what it is. Every time we drop a new episode, money is made.